Did you know there's an entire US government agency that exists solely to make home buying more accessible? No, don't click out of this video. I'm not lying. I know it sounds too good to be true, but I promise it's a thing. It's called the FHA, and they offer these things called FHA loans. Phew, thank you. In this video, I'm going to tell you all about them, what they are, their pros, cons, and how to get them. I'm your host, Delaney Yeager, and this is Learn with Zillow. FHA stands for Federal Housing Administration, which is a U.S. government agency that insures mortgages made by private lenders. Though you don't have to be a first-time homebuyer to get one, FHA loans are popular among first-time homebuyers as they help low to moderate income individuals qualify for mortgages. You may be like, okay, sounds great, but what's in it for them? To which I say, I like the way you think, kid. Keep questioning everything. But here's a bit of context. It was 1934, the Great Depression. Gone were the times of Blitz and Gatsby, present were the times of Hoover Stew and a very unstable housing market. In an attempt to stabilize it, FHA loans were created, and they've been continuing that stabilization ever since. Also, put simply, FHA loans promote homeownership, which is generally considered a good thing for the economy. But before you start scouring the streets for open house signs, there's more to know. While there are definite pros to FHA loans, there are also some cons to take into consideration. But we'll start with the good news. Pro, you can qualify for an FHA loan with a credit score as low as 500. Most lenders do require a minimum of 580, but that's still lower than the conventional loan minimum of 620. Pro, you can qualify with a higher DTI or debt-to-income ratio. Your DTI is the percentage of your gross monthly income that goes towards paying your monthly debts. Typically, lenders want to see a DTI of 36% or lower, but FHA loans allow for DTIs closer to 43%. This doesn't mean you should go mad and start financing luxury speedboats, but it's helpful if you live in a city where rent is super high, so a huge chunk of your income has to go towards housing. Pro, FHA loans allow for lower down payments. You've probably always heard that 20% down is considered ideal for a conventional loan. But with FHA loans, that sucker can be as low as 10% if you have a credit score of 500, or as low as 3.5% if you have a credit score of 580. I repeat, a down payment as low as 3.5%. A down payment that size means you can buy a home and start building equity way sooner than if you had to save up for 20%. And that, I repeat, is a major pro. Knowing you little skeptic, you might be like, yeah, okay, but wouldn't my mortgage payment be wildly high if I put just 3.5% down? To which I'm all, not necessarily. Because another pro is, interest rates are sometimes lower for FHA loans than conventional loans. Emphasis on sometimes. The interest rate you're offered is based on your full financial profile and the current market, but since FHA loans have a lower base interest rate, you could benefit from more competitive rates. But the math is different for every situation, of course. However, this pro does lead me quite seamlessly into our cons list. Even though you may get a lower interest rate, FHA loans do require mortgage insurance premiums, or MIPs. These exist in case a homeowner fails to make a loan payment. In other words, MIPs offset the risk for the lender. MIPs include both an upfront one-time premium payment at closing and ongoing monthly premiums on top of your regular mortgage payment. But the good news is, these payments aren't necessarily permanent. Buyers who put down 10% or more are required to pay MIPs for 11 years. After that, they're removed. Yay! But buyers with down payments under 10% are required to pay MIPs until they've earned 20% equity in their home, either by paying down their mortgage or through home appreciation. Once this happens, you have the option to refinance and get a conventional loan with no mortgage insurance. Get it? Are you following? Con, the limit to how much you can borrow with an FHA loan is much lower than a conventional loan. Loan limits vary by location and update yearly, and they're set to reflect the average home prices in low-cost and high-cost areas. For example, in 2025, the conventional loan limit on a single-family home in most of the country is just over $800,000. For an FHA loan, that number would be about $524,000. Con-ish. If the home you want to buy is in need of significant repairs, think damaged foundations, bad electrical situations, or lead paint, you likely won't qualify for an FHA loan. This isn't really a con because, well, it's good that the FHA wants to ensure that you don't end up in an unsafe home that you just don't have the funds to repair. But you may not be able to get that well-priced fixer-upper you've had your eye on. For a home to be FHA loan ready, it needs to meet certain criteria. So, if you're ready to be a homeowner, but your credit score and down payment are on the lower end, and you've considered all the pros and cons, and you've clicked all the helpful links below, and you're still ready to take the FHA loan plunge, applying for one is pretty similar to applying for a conventional mortgage. Just find a lender you trust that offers FHA loans, like Zillow Home Loans, an equal housing lender, and go through the formal pre-approval application process, after which your lender will tell you if you meet the requirements for an FHA loan. We've included a link below to help you get started. Okay, so do you believe me now? I told you there's an entire US government agency that exists solely to make home buying more accessible. I wouldn't lie to you guys. Seriously, it's very real for me, this relationship, you know? I don't see you as my audience, but as my dear friends, my family, my children.